opportunity. First thing is that we want to eliminate the amount of screen time because we said and mentioned that the more screen time, the more mental exhaustion. Volume is when big candles are displayed. You come to the chart most of the time and you see a candle running like this, almost more than 100 pip candle, one single 30 minutes candle this way. And you wonder when are these candles being printed? So most of these big candles are being printed during volume. Now volume gives us a diverse or a huge displacement of price. The more price is being displaced, the more money is being conveyed. So we want to come during these money making hours here. So there are specific hours that these sessions run. They are almost like 2 to 3 hour sessions, you know. So you get that Asia here runs from something like 2 a.m. to 5 a.m. You know, you need to understand that. Then London, you need to maybe come during 9 a.m. to something like 11 a.m. if you have time extension. And ultimately, you can do the New York here, where it runs from maybe 3 p.m. to 5 p.m. You know, to 5 p.m. So this one is Kenyan time, of course. So you can convert it to Eastern time and all those stuff and get your specific time in your time zone, you know. So we have pre-market sessions, we have pre-London here, we have pre-New York. There is little to no volume during those times. But yeah, you can get moved on those times, but why not wait for these specific times where there is volume? So one thing we need is volume to help us displace price, and it happens so quick. So if you're making money, you're making it quick. If you're losing it, you're losing it quick. And that's the whole point of this whole skill. You're not there to stay 24 hours to earn less. You're maximizing your time for some dollars. So that's what happens here. So I always urge the beginners to choose one session. One session is enough for you to make money here. So you don't have to be like, oh, I really need to participate in all the three of them. This one will come maybe naturally after you have already now understand that if you lack a move in Asia, you can get it in London. If we stagnate during these two times, then maybe the move will happen during New York. So you are coming to the next session because you lacked an opportunity during Asia, but not now taking opportunity in Asia, taking an opportunity in London, taking an opportunity in New York. Okay, in the beginning it can cause mental exhaustion. That's why we need you to focus on one session in the beginning. So hope you understand why you need to come during market session. So the whole point of market session is that volume when big, let's say financial institutions, the banks and stuff are depositing huge amount of money, you get that price fluctuates more. So that's why you need to come during this time to participate in this kind of volume. So no need to come when there is no volume because price will just be consolidating and we don't want you now staring at the screen 5 hours, 6 hours, some 7 hours doing nothing but being exhausted. So the first one is taken care of. You understand when to come to the market. The next thing you need to understand is the market structure here. So with the market structure, you need to understand how a normal candle looks like. First of all. So a normal candle looks like it has a body and wick. you know. So we have a body. This is the solid mass here. This is the body. Then the protruding stuff here is top width, top width, and we have a bottom width. We have a bottom width. You see? So let's say this is a bullish candle. So a bullish candle must have a strong body a top wick and a bottom wick here. So what really means is when this candle opens, it opens from here, the bottom part here. When it opened, the lowest point it went is down here, then came back to the entry. Then the farthest point it went is up here, but ended up closing somewhere here. So it leaves a body in the middle and the wicks to identify how far it stretched during its printing time. So depending on whether it's a 30 minutes candle or a 1 hour minute candle, so it takes this candle maybe 30 minutes to print, to open and close. Then if it's a 1 hour candle, it takes 1 hour for it to print, play around, to go as far as it can, to go as low as it can, then close at a certain point. So you need to understand this is a healthy candle here. So if it's a bearish candle, this way, it has both wicks and lower wick still, you know. So any candle, regardless of whether it's a 30 minute candle, a 4 hour candle, a daily candle, must follow this. So we have a top wick here and we have a bottom wick here, you know. But the only difference is that it opens at this point, goes as far as it can upward, then goes downward, stretches as far as it can, but closes at a certain point. So the opening and the closing points is what is different, but the wicks, all of them remain top and bottom, top and bottom. Know how to use them because they will be essential in our entries and where we place our stop loss. So that's why it's very paramount for you to understand when we say place the stop loss at the top wick of the confirmation candle. You don't need to wonder what you are saying. You need to understand that this is what we are saying. So, under candle anatomy, there are other candles that we will talk about them as we go on that gives other confirmations, like exhaustion candles that forms inverted celery. Those are types of candles still. And I think those are the those are the two candles. A normal candle and an exhaustion candle is the one that we will be talking about. And what meaning they give when they are present in the market. So the next thing you need to understand is what is a support and what is a resistance. So a support, try to look at it this way. A support is a structure that propels price to go further up. So we mentioned that price can't really go up in a straight line. This is one fact that you have to agree on. We don't go in a straight line like shoot to the rocket, like move from point 400 year points to something like 4,000 points in a straight line. You have to agree because it's something that you can see when you open the chart, you know. So what do we do in return? We 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 move upward in while forming structures. We go this way, come and form structures as we go up, you know. So the structure that is formed in an uptrend is when price moves from a lower value to a higher value. Let's say we are moving from 413 here, a price tag, to something like 500, you know. So we are moving from 413 to 500. Of course, its candle is printing upward. So that's an uptrend. The structure that it supports the movement of price as we go up is called a support, you know. So what is a support? A support is when a bullish candle forms right next to a bearish candle. So you have to get a bearish candle first, this way. Then immediately after a bearish candle forming, when you get a bullish candle right next to it, it forms a structure. You see, this way. So when this you see this on a chart, you just know this is a support, and the ideal way to mark it is just put a line at the bottom of the two bodies. So what we mean is this support ought to push price further up. So from support is where we start to see escalation of prices. That's why majority of our entries are based on structures because structures are there to help price move further up, you know. So yeah, you need to understand this. So and in a bearish, so this one we call it a support. And when in a bearish perspective, price does not go in a straight line, of course. We don't move from point one to B in a straight line. We don't move from 312 to 200 in a straight line, you know. So what do we do in return? We form structures as we go further down. Of course, the objective is to go down, but we don't go like four down. So we come, create some pullbacks, go further down. Create some pullbacks, go further down. So these are structures that are propelling price further down, and we call them resistances. So resistance are responsible to display price further down. So what and how is a resistance looking like? So a resistance is when a bearish candle forms right next to a bullish candle. So we must have a bullish candle in the beginning. Then right next to it, we get a bearish candle. This way, we get a bearish candle this way. So what we really mean is when you get a resistance here, you mark it as a body because it's responsible to push price further down. We are anticipating to see now candles going downwards from a resistance point, you know. So this is what we need to see. Sorry, sorry there. So creating resistance as we go further down here, and we need to see a resistance here as we go further down. So this is the work of a resistance here now. I hope you understand. It's to cause price to move further down. So having understood that, you know that now not all supports will propel price up, not all resistances will push price down further down. So your work is to find out when is the precise time for you to get inside a working support and a resistance support. And this has to do something now knowing how time frame correlate, which we will get next to on the third. So I want to explain now how candles relate to each other now. So here I just wanted to show you that how 30 minutes candles build up the 4-hour minute candle, how 1 hour candles lead to some how 4-hour candles lead to daily candles. And here now I'll have to engage you so that you may answer these simple questions which might create the mental picture of what I want to talk about, you know. So let's draw out a daily candle here. So we will work with a bullish perspective here. So let's draw up a daily candle. Let's say this is a bullish daily candle. So this is a bullish daily candle. You see it there? So this is a bullish candle. How did it end up being a bullish candle now? The first question is how many, so the time frames that we will be talking about most of the time is the daily, the H4, the H1, and the M30, and maybe the M15. So let's leave the M15 alone. So this is the daily time frame here. Sorry, the daily. And now we can create a table and we have the H4. So you answer through the chat. How many H4 candles form one daily candle? How many H4 candles form a daily candle? Yeah, 6. So do you see now this daily candle has has top week and a bottom week. Sindio? What really happened for these weeks to be there? So what happened is the arrangement of the H4 is not necessary. It's not something that should create tension. We can have candles arranging themselves the way they want. So we can have like the first candle on this daily was a bearish candle. It stretched far to this point. Then the next candle was a bullish candle. You see, let's say even the next candle was a bullish candle, but maybe didn't really fell up this way. Then the next one was a bullish candle which stretched down and maybe came up this way. Then and maybe the fourth one closed bearish, the fifth one, sorry. And then we had the last candle closing maybe bullish here. You see? So here I want now to show you something. These 6 4-hour candles, they open, the first one opens at the same time the daily is opening. The first one opens here from the top. It goes down, creates a support, we start moving up and create structure. So you see, the further we are going down to lower time frame, the more structures are there. These structures you can't see them on a daily candle, but they are visible on the H4. you know. So the arrangement of these candles is not something important. It's the only important thing we are focusing on the opening and the closing. We opened at a lower bid and closed at a higher bid, closing, making the daily close bullish. So we have one, two, three, four, five, 6 candles making a complete day here. So now we go to the H1. How many H1s are there that form a daily candle? In a complete one day, how many 1 hour candles can there be? Yeah, 24, right? So if we can't really draw the whole 24 candles here, so what we can do is now ask how many which one candles are there in one 4-hour candle so that we can represent one 4-hour candle out of these 24 hours here. So there are four. So let's maybe zoom and print out this last candle here. You see this last candle here, this bullish 4-hour candle. We need to print it out in how the H1 was happening here. So let's say maybe we started bullish, we really started bullish here. Then the next one maybe struggled to go up and we closed bearish. So the arrangement is not something that will create a problem. I told you where the candle opened and where the last one closed. Then we now found a bullish candle. The next one, this way. And maybe now the last one struggled to go up and we closed something like this. Just a bullish candle that has no direction. So you see, this one 4-hour candle, we can expand it and see the components of this one H4. So it has 4 candles, but we have an extra structure which you're not seeing on the H4 here. So, so there is building blocks of the higher one. This one has building forming this one. So this is the correlation we are talking about. If you can really go down and start knowing that this is the beginning of this 4-hour candle, and this is a new H4 that is now comprising this. 4-hour candle. Let's see if we can get structures in to displace the overall 4 hour. So that's the whole mental projection that you should have, you know. So when we come to the M30, most structures will be there and on and on. So this is a simple illustration of how candles relate to each other. I hope it really makes sense. So because we are always dealing with day by day trading, we are day traders. That's why I just started with one daily candle, went down and opened it up to the last one here, the last version. So that one makes sense now. So we'll now come down to the correlations of time frame here. You now understanding that candles relate to each other and they form their building blocks of the overall bullish candles, the overall bearish candles. More structure when we go to the lower time frame, you know, you understanding that now you have to be very observant on what extra structures are being formed here. Yeah. So which brings us to the next topic here, higher time frame to lower time frame correlation. So here is where you maybe need to focus a little bit. So in this topic, we will focus on H4 and H1, you know. So here you can do plus the daily, that's an additive, and here you can do plus the M30. But once you get the concept from the H1 and the H4, you can really correlate the daily and the H4, the M30 and the M1. So our main focus will be the H4 and H1 because of candle formation. This one are four that make this one H4 here. So I want now to show you what happens now. So let's print a one bullish for our candle here. So let's say this is a 4-hour candle, you know. So we want now to represent this H4 in terms of H1 candles. We said there are four. So I really want to print out the four of them here. So we can start with any form of arrangement. We can say maybe we began by bullish candle this way. We then now maybe went bullish again on the next one. Maybe the third one created a bearish candle here. And the last one created a bullish candle this way. So when you combine all these candles, they form this one bullish candle here on the H4. Yeah, which is quite easy now to know that based on what we have talked a while ago. So uh, now we want now to see if now you're getting maybe, but so let me talk about something about candles here. So we have talked about the creation of a high, then we are forming a lower low. We go from a higher high, we come from a lower low. We go up from a higher high, we come from a lower low and go up. Yeah. So what I really want you to focus on is this. Let's say this is a higher high being created, a lower low, then you go and form a higher high again, then came and created a lower low, then formed a higher high and formed a lower low here. Ndio. So I want you to pay a keen observation of what I'm about to say. When we are going to create a higher high and we are coming to create a lower low, it should not be back on this level of this lower low. Haifai kupita the higher high of the previous formation of a structure. So it's supposed to form above the other one here. So this one, the next one, we should not form inside. You see? So then somehow we are not diving inside to create a lower low in this range here on the downward side. we are respecting this formation. Now, this one, it can be useful in a trending market where now you get support being created in an uptrend. But what does it really mean in candles? Specific candles. What we mean is this. Let's say we have a bullish candle here. This one is the lower low here in a candle. And then this is a higher high here in a candle. So based on this simple image, it means that the next candle must form a lower low, sindio, before forming a new higher high. So this lower low should not exit this one here, should not take this out. So it's something that is known. So we are forming a lower low and then we displace price to form a higher high. You see, so we are forming a higher high, leaving a lower low. Then the next one has a jurisdiction of opening up to form a lower low, then to form a higher high. So do you see how candles still respect that? Candles still respect that model, and structure also respect that model. Where we have an uptrend, we are coming down to create a support to go further up. So this one is, I have really done it down to candles for you to understand what really happened. So the respect of the lower low, you see this lower low not coming down to take the other lower low. So we must form above it. That's why you need this candle to respect this low and this candle to respect this low. So that being said, we come back here. So let's say the 4 hour was a bullish candle here. Huh? So maybe it increased the probability of the next candle going up, the next 4 hour coming up. So if the next 4 hour is opening up here, it means we have a new 1 hour candle opening up here. Is that true? Yes, of course. So this candle of the H4 has to make a lower low before making a higher high. What will this look like in the lower time frame when you're coming to form a lower low? That's where the trick now comes in. It will mean that there is a movement in the lower time frame and it even might lead to a bearish candle closure. Because mark you, this 4 hour has other three candles waiting to print out to displace the candle to form a higher high. So let's say the first 1 hour candle closed bearish. You see? Then now we are forming a lower low. Let's say it did that part of forming a lower low, and the next one now went down to form a more steeper wick, which maybe we never finished creating that lower low. Now this one forms an extension in the H4. We are coming down in the H4. Then we end up closing maybe bullish. Maybe we close bullish on this candle. You see, now we have a bullish candle closing there. So two candles already are printed. Now we have a lower low on this 4 hour this way. And maybe it's now time to move up and form a higher high. You know? So we need now to form a higher high. Now what will happen here? You will see an eruption of the next third candle up. So at what level do you now know that this H4 candle has completed forming a lower low? When a structure in those 4 hour candles zenye zinaform the H4, among them, those candles form a support level. You see this support level that popped? This is when you can now say with volume in the market that we have finished forming a lower low and it's time to create a higher high. And this simple knowing that there is a formation of a lower low and formation of a higher high is what is making us make money. So we participate in this move going up to form a higher high. Now that when a support emerges and it's among the 4-hour candles forming this H4, when a support forms, we can really now go and form a higher high. Have you seen how we have correlated the formation of a lower low, higher high to relations with candles? We never used this support that were for the previous candles. We used a new support of this candle, because it's a fresh H4 candle. You need a fresh support to propel that H4. Is that clear? So this is the level where now you will know that we have finished making a lower low and we can form a higher high. Is that okay? When a support emerges in the lower time frame, and this is what we call now correlation. You being able to visualize and anticipate creation of a structure to form a higher high in an upward movement. So with that being said, let's talk about a bearish perspective here now. This was a bullish perspective. Let's talk about now maybe something like a bearish movement now, where now we can see the correlation of this movement. So let's say the H4 had closed bearish here, and we want now to draw these bearish candles, how they will be looking in the H1. Let me delete this first so that will illustrate the trending one in a downward movement. Okay, so we can delete even these bullish candles. So yeah, come here now. So we want to represent this H4 candle here. So let's say the first H1 candle that formed that H4 was bearish here. The next one really came down also. So the arrangement doesn't really matter. You can even have a bullish candle in between here. So let's say we form a bullish candle here. But maybe try to form and created so I'm just combining candles here. Not really the this is what you'll be seeing each and every single day. Then maybe the next one came down this way. So let's say this is the four candles that formed that H4. So the most important thing is the opening where we have here and the closure where we have here down. So let's go back here in a trend. So we are not going in a straight line, we are going as we create structure. So we are coming down, having a pullback, creating a resistance to go further down, having a pullback, creating a resistance to go further down. So we are creating a lower low, coming to form a lower high, coming to create a lower low, coming to create a lower high, then further creating a lower low here. Then we can create a lower high and come create a lower low again. So we mentioned about now how these lower highs should not take out the previous level. These ones should not take out the previous level. So as we are coming up, we respect that level and come down. What does this mean in candles now? If we have bearish candles here, so this one represents a lower high and then this is a lower low here down. So the next candle should form a lower high there, then come and form a lower low, respecting the lower high of the previous one. Then the next one should form a lower high, then come and form a lower low. So there is respect here. But while forming the lower low, you see that lower high, when we are coming to form a lower low, we are taking out the previous lower low. So that's why you see candles taking out lower lows here while respecting the lower highs. So I hope that makes sense. So we come here now. And now we want to see maybe there is a probability of this next H4. Let's say we have a clean range and all that stuff that we talked about. So we need this candle to form a lower high. We need it to form a high here, you know. So what does it really mean in this H1? Since H1 is a lower time frame, you might actually get bullish candles coming up now to form that lower high. So let's say the first one created a bullish candle, the next one really created a bullish candle that way. Then the third one is now the one creating a resistance to go down. Then we get a resistance now among the four candles forming this 1 hour candle, 4 hour candle, sorry. So we have a resistance here. So the formation of a resistance in the lower time frame, while this H4 is still printing, really means that the H4 might now have finished creating this lower high and we need to create a lower low. Now, this is the point where we get entries in lower time frame, when we get the structure to confirm that we are finished forming this lower high. So we start now coming down. We form, even the smaller time frames have to form a lower high and form a lower low. So this movement to come and form a lower low is what we want to take advantage of, because we know that this 4 hour has to create a lower low if we are trending. So that's why we always take advantage of this move here. And this finishes the business of higher time frame to lower time frame correlation, because this is what ultimately happens. So I hope I have really done my part here explaining it, and you have really gotten this concept to the T. You will watch this video over and over because we are having it on record, so no doubt about it. And you will listen carefully to what I'm saying, because I'm just talking here, but if you slow down and listen to the video, you might actually get what you missed out. So this is what we call now the H4 and the higher time frame and the lower time frame correlation. So let's come here now, explain this now as we have this chart. So the H4 is giving us direction. We know that we are forming a lower high to form a lower low. So that's the direction we are aiming to go down. Then the lower time frames are giving us confirmation and entries to form the lower low. So you see the responsibility. Each time frame has a responsibility. The higher time frames are for direction, the lower time frames are for confirmation and entry. You understand? So I hope you understand. And this one marks us off the third part here. The entries. Now let's go to the entries and stop losses. So in any movement of a candle, especially if it's a trading market like this one that we are talking, so we need a support to confirm that we are finished making a lower low. We are going to form a higher high in bullish candles. We need a resistance to show us that we are finished forming a lower high to go and form a lower low. Is that correct? That is correct. So in your mind, you only need that confirmation candle. So I will illustrate the confirmation candle here, not the entire structure, because you already know what is happening now. So let's say you already know how the direction was and you have anticipated and you have gotten your confirmation candle that is forming a structure. We talked about structure. And yeah, so let's start with a bearish movement here. So we have a a support, a bullish candle forming, sorry, this way. And then the confirmation candle is a bearish candle saying that we have finished making a lower high and we can form a lower low. So this is the confirmation candle, this bearish candle popping up in a trending market. So this one will happen in H1 or M5, lower time frame. So have in mind that structure that we formed here, this way, and how we illustrated a candle should be, you know. So the entry is based off that this one has to form a lower high. You must allow it to form because we have seen that it must form. Then you come and take down the lower low of the previous candle as the entry. That's what we call a lower wick and anticipating this move. So the entry is based on the previous lower low candle and the stop loss is based on the previous candle low high. So those two are the entries and the stop loss. This is the entry and the stop loss based on what you understand about this one here. Candles has to respect the lower lows of each other, the lower highs of each other, and take the lower lows of each other. This is the money candle. You can see it here. Is the one making the rapid movement to form a lower low on the H4. So I hope it makes sense. The entry and the stop loss will never change. It's somewhere strategic. It's somewhere that you don't have to adjust. You don't have to modify. It's somewhere protected. That's how candles move. We are making the entry at these lower lows because that's the only time when we displace the lower low we can make a further lower low. You know. So this is in a bearish perspective. Let's talk about a bullish one now. So a bullish, the H4 is bullish. The next one has to form a lower low to go and form a higher high. So the only time you know that we have already finished making a lower low is when a support forms in the lower time frame. So a support is a bullish candle forming right next to a bearish candle. So we have a bullish candle there forming. This is yeah. Then what did we say now? We have to form a lower low and then go form a lower high, a higher high, sorry. So you even can know now. The entry is based on the higher high of the previous candle and the stop loss on the lower low of the previous candle. So this is the entry and the stop loss goes right next to here because with volume you know now that you can start trending and that trending you don't go in a straight line. You have to form structures as you go down. But in candles, we have to form lower lows, which still take the movement. You see, it's the same movement that we are talking about. So always respect this movement because that's how price moves. Indeed, we have now the entries and stop loss taken care of there. You know, so the playbook setup will go there. So with the playbook setups, we have 4 playbook setups. So the first playbook setup, we call it an onion. The second playbook setup is a breakout. And we have the third one here where we can call it an inverted seller. We will not talk about the fate. The fate we will talk about it once we start now being into the game really good. So these are the best high probability setup with a more than 70% win rate if you do it correctly. So I will illustrate an onion. I will not illustrate because it is what we have been talking about here. You see the formation of a resistance or the formation of a support in an uptrend. That's what we call an onion. So the first one is catered for. So we need to find out what is a breakout now, you know. Or before even the breakout, we can talk about the inverted salary. The inverted salary is so close to an onion. So I would really love to illustrate now here based on this candle. So we'll not go far here. So we know exactly the direction. That's the first thing you need to understand in an inverted salary. And now you are on the lower time frame, but instead of getting a resistance, you are getting an exhaustion candle that represents a resistance. So an inverted salary is an impulsive trade with no structure. So let's come here. Let's delete this. So you understand all those things. I hope you really have that this information here. We are now starting to form a lower high. The candle is beginning to form a lower high. So you're in the lower time frame, you're seeing bullish candles. Then maybe let's say that this candle here, this candle here wakes up, tries to go up, but we come and close with a small body here and a extensive wick on the top. So it is now at this level, this candle will not be called a bullish candle. It will be called maybe a rejection candle or an exhaustion candle here. It has really exhausted. It has no bullish power. We never really closed strong. We closed with a small body, with a small to close not top bottom width, and this one here. So with volume, we know that we are supposed to get a resistance to show us that we have finished making a lower high to come and form a lower low. But we looked at data and found out that when you're waiting for that resistance to form, if price now starts to form a lower high here and start to take the lower low of the previous candle, we might actually get that bearish move that is forming a lower low on the higher time frame. So we found out that when you get these exhaustion candles, when you are waiting for a resistance, you can take in sell as you take out the lower low of this exhaustion candle. You take your entry there and you have your stop loss somewhere above the current candle create taking out the low. So it's more of that onion, it's more of when you're getting a resistance, but you are now educated that when you get an exhaustion candle, there's no need to wait for a resistance. You can take an impulsive sell as you take out the low. This needs a lot of data taking and it needs a lot of keenness to look at this. What do you call this? The candle formation of this specific confirmation candle. So this is the confirmation candle because it speaks something like this. We tried to close bullish, but we couldn't close strong. We closed with a small body and a massive top hit on the bottom. So this is an inverted salary in a downtrend. So this one can really show that we finished forming a lower high on the H4 and it's time to form that lower low. And you now don't miss out this move waiting for a resistance, but instead take that impulsive sell. You understand? So let's showcase what happens in a bullish market here. So you understand that in a bullish market, we are coming down to create a support. So we have the H4. I will start from the H4 so that it doesn't cause confusion here. So let's print out the H4 direction we see. So the direction is bullish. So we have a bullish candle here on the H4. This way. Then we form, okay, now let's print the previous H4 candle. So we can just combine four candles here. The combination doesn't really have an issue. One, two, three. Let's say all of them formed bullish. Then maybe the last one closed there. Four. So these four candles forming are forming this one for our candle here on the left side. These are the ones forming this one here. So you have a new candle. You are anticipating a movement up, but the first assignment of the next 4 hour candle is that it has to form a lower low, then go form a higher high. Never forget. So when coming to form a lower low, what is really happening on the lower time frame is bearish candles are coming down. So this is the first 1 hour candle in this new 4 hours. We come down this way. Then once you are waiting for a support to form so that you can know the lower low has already been formed on the higher time frame on the H4 and it's time to go up and form a higher high, you get a candle like this. A small bearish body candle and a steep rejection candle from the downside. So instead of getting a support as usual to take an onion, you get this candle forming a rejection from the downward, illustrating that we tried to go down but we couldn't manage to go down. And so here, if you wait for a support to form, it will be the move that you wanted. So you might miss out the move while waiting for the support. So this is when now, when this one forms and we start taking out its high here, you can now see that we have finished forming the lower low on the H4 and we are going to form a higher high on the H4. See there? So we already have a lower low which is now represented by this wick. Yeah, the stretching downwards. Let me make it steeper so that it makes sense that way. And we are beginning now to go up to form a higher high on the H4. And that higher high is what we need to take advantage of. So the entry will be as we take the previous candle lower high because it's a bearish candle. So there goes the entry. And the current candle taking the lower high of the previous candle is where we place our stop loss. So it has a unique stop loss, this inverted seller. Watch the video over and over to see what we mean. And this is the advantage move that you want, that will make the 4 hour go high. So this is the inverted celery setup. So it's like just an onion. So you know about an onion, formation of a support, and you know about an inverted. So let's talk about the breakout now as the last type of setup. So they are not so different. We will use these illustrations here to illustrate what a breakout is. So let's say that you already know the direction here. Clear? You already know the direction here. You already know that this is a bearish H4. The next one has to form a lower high to come and form a lower low. And you already know that coming to form this lower high here is movement of price upwards. So let's say this. While now this is the 4 candles forming the previous H4 and we want to form this candle now. In the process of forming this candle, you get a bearish candle moving up to form a lower high, this one here, there. Then the next one doesn't really go up. It tries to go up and we form a resistance just there beneath. So all these setups are related. So you get a resistance there. Here. Now, here, you can't really now start taking the sell even if you already know that a lower low has been created by this resistance because there is no tradable range. A tradable range is when we say you have to have a smooth path for price. Price does not have to knock supports and resistances on its way down. You know, so at this level, even if you understand that you have already created a lower high here, you have to wait for candle to close down below this support this way to give you the movement downward. If on this left we had clean candles and the next support level is down here, you can opt now to take the sell, knowing that you have a higher high and you are supposed to make a lower low. So the difference in this breakout trade is that when you're getting a structure or you're getting an inverted candle confirmation, but you have no tradable range, that's when you wait for closures. Now this brings about a breakout trade, you know, when you're forming those structures, but there is no range for price to move. A range is the distance between a structure and a structure. The distance between this resistance and this support is so short. When we are executing on onions and inverted, we have a wide range for price to move. You know, we have like from this support to this resistance, we have like 100 pips, you know. So this breakout comes in to help you now participate in a tradable range instead of taking trades where there is no range. You understand? So a breakout is still part of that onion, but in order to participate in good trades, you have to have a tradable range within you to help you take out the trade. So the candle closing below the support is the tradable range, is the confirmation candle, sorry, you know. So once you get the confirmation candle, it has a lower high and it has a lower low. The entry is the same as when you get a resistance. We take it as we take the lower low and stops above the previous candle lower high. So the entry and the stop loss criteria is always the same when you get the confirmation candle. So I hope it really makes sense here, you know. So a breakout comes in to help you participate in more clean tradable ranges. That's when a breakout comes in. Whenever you come to the chart and there is no clean range for price to move, you have to wait for closures above or below. That makes it now a breakout trade. Understand? So in a bullish perspective, you can already imagine what I'm about to say. So everything else remains the same. You have a clear indication of direction. The 4 hour has already formed a lower low. Now we are forming a support. Let's now form a support. You now have your confirmation. You know, so now we are forming a support here. You have your confirmation. But now the support is forming right next to a resistance. You see this support? Oh, sorry. You see this support here? Here? It's forming, yes, to indicate that you have already formed a lower low. But where is it forming? It's forming right to a resistance point. But a while ago, when we drew these supports, we were drawing them down here to illustrate that we have a clean range for price to move. That's why we always take this move up because we have a space for price to breathe. But when you end up forming a support, sorry, but it forms somehow bullish and forming that support, but right next to the resistance. Now this trade you have to wait for a closure above. Now a candle to break out. If we have a clean range again from this resistance to another resistance to participate now in a trade. Now the waiting of a breakout above is what we call a breakout. This is the confirmation candle that you can now go further. So the low is still protected down here, but for entry purposes, we have to wait for a breakout to be precise in the entries and the stop losses. You understand? So that has to do with the setup types and playbook setup, and how you relate the code, the higher time frame and the lower time frame. So we have the third one here being cancelled out. So we have this, and this. So on this playbook setup, because now I want us to wind out, we will create another video now to show the common mistakes in the playbook because we already know the setup types and the entries and the stop loss. And now the technical analysis on how we have to do it and the mental approach, which now we will leave pending for another video. So we have really went down and broken down the three first important things: market sessions, market structure, higher time frame, entries and stop loss, and the playbook setup in this video. So that's how we now break down the rest of the video. Now explaining the stop losses and the most common issues done while waiting for these structures, while waiting for this setup, and how you can avoid them by being patient and waiting. Waiting and having patience to wait for these structures to form. That makes the end of this first video now here. So you're still here or you left or you're left?
Yes, 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 we're here.
Okay, nice one. So it's really an engaging video. So we'll have to do a next one video. We'll schedule it maybe between the